Hello guys and girls, welcome to the other episode of daily analysis from the Forex Clubhouse. So this is volatility 25 index, and this was the head and shoulder pattern that we did take together with my subscribers who have joined my Telegram group, whose link is in the description below. So guys and girls, let's watch how we do analysis in other pairs, and hopefully we will get another opportunities more bigger than this. So I will start today with volatility 75 index, because volatility 75 index is the most favorite pair of most of the synthetic index traders. So we as day traders, we are to start with the 4-hour time frame as usual. So on the 4-hour time frame, first we can see that this market previously was on an uptrend, and we can see when the market came to this level right here, it went back to retest this previous higher low of this uptrend movement. Now we can see right here that the market did break this level right here. Does this show, or does this tell us that this market or this uptrend market is over? Yes, it does. Why? Because once the market did came and break this level right here, then it formed a new higher high of this uptrend movement. And once the market came to this level, then this level is termed as the previous higher low of this uptrend movement. And we can see right here that this market broke this level and closed below this level right here. So this obviously shows that this uptrend movement is officially over. And right now, we as good traders, or we as day traders, we are ought to just start looking for sell entries for this day or this week whatsoever, until another form of trend is already created. So since we know that this uptrend market is over and we are to look for sell entries, now we go to the lower time frame to see if we will get some kind of entry opportunities today, so that we can ride this downtrend movement together, but without forgetting such important levels at this, because once the market reaches this kind of levels, it shows that the market may or may not respect the levels, but they're just worth considering or worth noting on your charts. So we know how a downtrend market moves. So for the sake of reminder of ourselves, so that we don't take reckless trades, let us remind ourselves how the downtrend market moves. So we know the downtrend market moves in series of lower lows and lower highs. That's how the market moves. And how the nature of the market moves? The nature of the market moves in 3 phases. The impulsive phase, the corrective phase, the impulsive phase. So those will help us to keep us in check, because we are to trade market structure only. No reckless trades, no reckless leaks. What we do is we take high probability trades only. So right here we can see that this market was moving beautifully, making series of lower lows and lower highs. We can see the market did form the second corrective phase, and now it's on another impulsive phase, which is turning into a second corrective phase right here. So what we should do is we are hoping for another impulsive phase. So let's note first, once the market came around here, it broke this level. So right here you can see we are on break of structure. So let me label some words here to remind me next time when I come to this trick. You can see here we have break of structure right here. So what to do is the market may come, or may decide to come all the way up here before actually selling, and that's so once the market moves this way, that doesn't tell us that this downtrend movement is over. Unless this level first is broken today, then it can be termed that this level is broken, right? If you want to catch these entries today or tomorrow with me live, make sure you join the Telegram group, whose link is in the description below. So guys and girls, we can see this is one of the way that we could ride this trade. So let us go to the 1-hour time frame to get another clear view of this volatility 75 index. Now on On volatility 72 index 1 hour time frame, we can see after the break of this structure, the market is forming some kind of a reversal candlestick. We can see here we have reversal candlesticks. We have the doji candlestick, which is obviously a reversal candlestick. Now, we do not trade these candlesticks just blindly, because these are reversal candlesticks. Then they must have a particular level that they can actually reverse, because if they just occur out of nowhere, then with these types of candlesticks, we normally take them to be as just a continuation pattern. So let's see if there's any level that this market may respect. So we can see here the only valid level of this market was around this level. This was only valid level that could have been respected, and we can see this market did already break this level. So right here, this is the kind of candlesticks that I will not enter as a sell or as a buying opportunities, considering that it may reverse, unless otherwise on the lower time frame we get a minor change of structure on this impulsive leg right here. That's where we could scalp off for short-term buys before actually selling. But the general view of this market is we are to look for sell entries for the time being. If you are on volatility 75 index, go to our charts and share with me your analysis on my Telegram group, and I will discuss together with you, and hopefully we'll get some nice entries together. Let us go to the 30-minute time frame. So on the 30-minute time frame, we can still see that this market is on a downtrend. So we are not so ever have any kind of anything that can tell us that we are to look for buy entries today. So guys and girls, stay away from having a buying mindset today on volatility 75 index, and put your mind into sell positions only. So let me go to volatility 25 index and see if we will get some entries after the formation of that head and shoulder pattern. Now on the 4-hour time frame, we can see that this uptrend move, because this is the expected take profit that we did forecast together, because we say the distance between the head and the neckline is the approximate distance that the market must move. And we can see right here the market is already covered, has already covered this movement, and currently it's on this important level of support. Now this is the kind of levels that the market may decide to reverse, because there are many factors. First, because this expected take profit has been hit more than 100%. We can possibly say 101%, and currently the market is on this support level. Now on these kind of levels, the market may decide to bounce back up, but that does not necessarily mean that the market must bounce up. We all know our entry conferences. First, weak rejections. Secondly, the formation of a doji candlestick. And for those who are liking to take smart risk or more reduced entry risk, we always wait for the change of structure on the lower time frame, because currently you can see the market is moving on a downtrend. So even the lower time frames such as the 15-minute chart or the 30-minute chart or the 5-minute chart, we see the change of the market structure. And by the change of the market structure, I normally consider this leg that is forming. So right now we can see there the market is still on very bearish, although it's on these support levels. So what you do is open up your charts today and observe volatility 25 index. Remember, we only trade high probability setups. We only trade market structure. If there is no market structure, close your computer and go do some other extra activities. Bye bye.